Since the outbreak of armed conflict on February 28th, the crude oil futures curve has moved sharply into backwardation. Backwardation means that prices for near-term delivery in, say, May or June have risen above prices for delivery further in the future. But what does backwardation mean for investors? To help answer this question, we looked at over 40 years of historical data from our West Texas Intermediate crude oil contract dating back to 1985, and we looked at what might have happened to two different portfolios. In one instance, we look at how a portfolio might have performed if it had been long crude oil only during times of backwardation. In the second instance, we looked at how it might have performed if the investor was long only during periods of contango. In futures markets, contango is the opposite of backwardation, when prices for near-term delivery are lower than prices further in the future. But first, a couple of caveats. Our analysis ignores transaction costs and assumes that futures positions are fully funded and therefore not leveraged. It also ignores any earnings on underlying cash and focuses solely on the theoretical gains or losses from the futures contracts themselves. Finally, it assumes that positions in front-month contracts are rolled 10 days prior to expiry into the next month's contract. What our analysis shows is that over the past 4 decades, being long WTI futures only during times of backwardation would have resulted in substantial gains, while being long only during times of contango would have resulted in significant losses. What this tells us is that historically, investors have often underestimated how long periods of contango or oversupplied markets and how long periods of backwardation or undersupplied tight markets have tended to last. So when we look at prices today, short-term oil prices have been trading around $100 per barrel. But further out, say in December, they're only around $75 per barrel. So what should investors expect? Well, history suggests that the December future could see further upside potential, but a lot of this depends on how quickly the flow of oil from the Middle East returns to normal.